Today we have Nick Hayes, one of the principal partners at the Digital Investment Asset Group. It's a hedge fund centered around Web 3.0 assets and cryptocurrencies, and really excited to talk to him about a lot of that stuff today. All right, Nick, what's going on, buddy?
What's going on? How you doing?
Good, man. I'm doing very well. Thanks for making time to come on.
Yeah, thanks for having me.
Oh, absolutely. So we've known each other for a long time, right?
We'll go way back.
Yeah, go way back to our baseball days, college days, and things like that. We probably met up a few years ago when you were doing real estate investments and things like that, and I was really impressed by just the way you handled your business and things like that. And I was like, I'm going to keep an eye on him because he knows what he's doing. So can you tell us a little bit about your background, how you got to become the partner of a hedge fund now, and where you are in your life, and that sort of stuff?
Sure. Yeah. So basically, my whole life, baseball was my life. Ended up playing baseball D1 in college. Started off at Central Connecticut. Ended up going down to UNC Pembroke in North Carolina. Didn't actually end up working out like I hoped. Ended up graduating from URI. Majored in entrepreneurial management and business and finance. So I'd always knew that I wanted to own my own business one day, and I've always, found a deep interest in money. So, I was one of those kids growing up that was always, I always had my own little business going. In high school, I was flipping cell phones, and I noticed that people stopped when they got their iPhones. They stopped using their iPods and the GPSs, and I started buying those off people and flipping them. So I was always into something, trying to work and make money. So out of college, me and my father basically started investing in real estate in my local area. My father is a GC and a structural engineer, so I've always built houses with him. And in my local area, Narragansett, Rhode Island, it's right next to URI, so it's a perfect spot for real estate investing. You can rent out to students for 9 months out of the year, get really good rents, and then we rent weekly in the summer and also make really good rents. So it's a great business model there, and we built up a nice little business for us and our family. In the meantime, I also got my realtor's license. I started kind of working with other investors in the area and carved out a little niche for myself because no one else was really doing that in my area. As far as sales go. So I networked with a lot of investors, did fairly well for myself, since college. However, real estate investing, I'm still passionate about, but the sales aspect just wasn't for me. That I never wanted to be a realtor. And it just wasn't something that got me excited every single day. Also around, 2020, around COVID time, they started changing some rules about, in different ordinances in Narragansett about, how you can rent your property. So it just made it less attractive long-term. So I was always kind of looking for that next thing. Around that time, I was also working with a buddy on trying to find a rental property for himself. He's more of a tech guy, where I'm more business-minded. So he was actually working cybersecurity at Raytheon at the time, and everyone that he works with, they're the people that are building crypto. They're the ones, the early investors. So he's kind of pitching me on crypto, and I had studied it before. Like, I generally understood it back in college, 2016, actually before the major bull run in 2017. I was researching it at $200 per Bitcoin, and now it's laughable, but at the time seemed like a lot. I didn't really understand it. And I was trying to be a diligent investor, and I was trying to fully understand it before I invested my money into it. And at the time,
that's like breaking rule number one of crypto. It's like
ape in,
shoot, aim.
Yeah. So by the time I was comfortable with it, it had already gone up to like $800. Thought I missed the boat. So
that's the highest it'll go, right?
Yeah. So I never pulled the trigger, and granted, I didn't have much money at the time anyway. But basically sat on the sidelines that whole year and watched it go up to 20K. So what was good is that I continued to learn about it the whole time. I just never actually invested in it. Then again, I focused on my career in real estate, and again, started to build up that business, and kept an eye on it here and there. But it never really struck me as having the potential magnitude that I see it having today, and which
Bitcoin in particular, or just cryptocurrencies in general?
Cryptocurrencies in general. I understood the value proposition for Bitcoin. It just didn't really jive with me as much personally. But I didn't really understand everything else that was being built at that time. And granted, at that time, a lot of it was a lot of scams. So this was called the ICO craze, initial coin offering, which a lot of them were scams. A lot of people lost a lot of money. Yeah. So nothing of true value was really being built at that time. It was very similar to
tech bubble.
Yeah, tech bubble, exactly. And from the ashes came some major projects, which we'll go over in a little bit.
Yeah, and I think that's one of the big things I want to talk to you about, because people see it's like, okay, decentralized, they know the talking points. Decentralized currency, get off the US dollar. Yeah, I see where it's going, but that's all they know. It's like, okay, Bitcoin's good, and then there's a bunch of other stuff out there, and they don't understand really any of it and what it's built on and what it's building towards.
Right, yeah. So that's what this conversation will be, is really getting that person that doesn't really have any fundamental understanding, or maybe even thinks it's a scam, to get them from that like 0 to 1 moment, from no understanding to, wow, I actually feel like I kind of understand it and I see the value proposition in it. So yeah, just to finish up on my background, basically I got heavily into crypto, spent 15 hours a day on it, like knew that this is what I want to do. Naturally started telling all my friends, family, investors about it. I started, not managing, but helping other people on board and, create a Coinbase account or whatever, but it quickly became overwhelming. All my investors at that point, believed me and, had faith in me, and where the space was going. So they were like, hey, why don't you start a fund? We can pay you to manage all of our funds, and we don't have to worry about it. They're busy as they are. So they want someone else to passively be able to manage it. So, I thought about it. I have a buddy that actually has his own traditional hedge fund. So he helped me kind of with the onboarding process of learning what to do. And basically spent the beginning of 2021 creating the fund, and we launched last July.
Okay, so, who's your buddy?
McKinley Slade.
Okay, and he had the kind of finance hedge fund background. Did you know anything about hedge funds before you started this stuff? Because if you told me go start a hedge fund, I'd be like, fuck it.
Generally, I knew a lot about finance and investing and trading and whatnot, just not the particulars of how to actually launch it. But at that point, I was just doing research, and so I just kind of
got it. And now one question before you get into that: is this like the first of its kind? Are there a bunch of are other hedge funds obviously are diversified in Web 3.0 assets, but are there any other ones like?
Oh, there's plenty. Yeah.
Yeah, there's plenty. Okay.
Yeah. There's still few and far between relative to the traditional market, Absolutely. But there's still a lot of them. And especially over these last 2 years, there's been a lot of them that have launched. And similar to me, people that, have experience in it, but not necessarily coming from traditional finance backgrounds, which, to be honest, you don't really need. You just need to have more of an intimate knowledge of the space more than anything. So we have a different strategy than probably most other funds in the space. But again, we won't really get into that for this conversation.
Yeah, for sure. It's not, like most things, if you truly understand something and are an expert in that space, you can provide other people value there.
Right, absolutely.
Way. So take me through, if you're going to be talking to the person who knows absolutely nothing, walk me through it.
Sure. Yeah. So the first thing that I want to go over is just a couple fun facts, I guess. Okay. Try to get the listener excited a little bit. So right now, the crypto market is actually growing at 2 times the speed of early internet. Think of early internet, 2000s, for example. 2 times the growth. That means user adoption, new users every single year getting into the space. So you can imagine where that could lead us. We all live through the internet and seen what it's become today. Now think of all the people that are now digital natives that understand how to use the internet, and now blockchain's leveraging the internet. So I just see the whole space growing and continuing to grow exponentially. This is truly the first time in human history that everyone in the world has had equal access to investing in a brand new asset class. First time in history. We are going to see the largest wealth transfer that we've ever seen, as it enables someone with basically no money but an internet access ownership of what will be some of the largest companies in the world. Currently, the crypto market cap is about $2.5 trillion, give or take. Traditional stock market, at least the US, a little over 100 trillion. We are strong believers that in the next 10 years, this space will be equal to or even larger than a traditional stock market. So that's roughly a 50x growth in the entire asset class, not even just individual assets. So that's where we're taking more just a long-term approach to it and say, all right, we just need to be along for the ride. But if we have an intimate knowledge of the space and we can get in on the best projects early, then we can ride up that entire wave. So that's basically what we're trying to provide to our investors.
That's unreal. And basically what you're saying is you have to think globally. You can't just think, oh, well, are people in, Rhode Island going to start investing in this? It's like, no. This is giving, like, the internet has given access to everyone, this opportunity. And now globally, there's going to be a huge adoption of this. So think globally, not just locally.
Not anybody in the world can invest in U.S. equities Correct. Or Japanese equities. Anyone in the world can invest in the exact same crypto assets. So that's one of many reasons
for that huge growth and people just taking off.
Yeah, absolutely. So I'll go over a couple of the boring definitions first, and then we can get into the fun stuff just because it helps.
Yeah, boring definitions help.
Yeah, I'm trying to create that mental framework for someone. So what is crypto? Crypto is short for cryptography. Cryptography is basically a cutting-edge security technology. It's the study of making super secure interactions through the internet. And as we go more, as we get more digital, it's of the utmost importance to have strong security within technology. And most people today still don't even know how to securely manage their passwords or whatever. They use ABC123 as their password on every single thing. So
or send someone their credit card number.
Yeah, exactly. So cryptography is just the study of trying to make all that more secure. Cryptocurrency. This is a widely is a wide misconception that you see around crypto. So people hear cryptocurrency and they hear that there's tens of thousands of these cryptocurrencies, and they hear that they're volatile and risky and people get hacked and lose money. Exactly. So they therefore think, all right, well, there's tens of thousands of these. Why would anyone want tens of thousands of different options to use as currency, especially if they're volatile? No one wants to transact in something that's volatile. So they immediately think, oh, it's a scam, write it off and think nothing of it. In fact, it's almost the exact opposite. Like almost every headline that you see in media these days, there's just a lot of false narratives out there. So the reason why it's called cryptocurrency is because Bitcoin, which was invented around 2009, was basically the first cryptocurrency to kind of attract worldwide adoption. It was, in fact, trying to be a worldwide currency, a currency for the people, by the people, that is censorship resistant, that government can't just shut down at any time. Now, this may be semi-controversial, but it's basically failed to be a currency. However, because it's super secure, it's basically become a store of value, sort of like, people call it digital gold. But that's really, at this point, all it's used for is a store of wealth and really like a collateral asset in the crypto space.
Yeah, similar to gold in the way it can't be artificially inflated.
Yeah, and that's another thing. I won't get too much into Bitcoin at this time, but basically there's a max cap of 21 million Bitcoins. So it has inherent scarcity, kind of like gold does. And basically for the next 5 years, all of the cryptos that came afterwards were all trying to just really compete with Bitcoin. So they're all trying to be currencies, and therefore the space was dubbed cryptocurrency.
Got it.
I'll get into some other projects afterwards that are really what crypto is at this point, but I'll finish with a few other definitions. So you'll hear blockchain a lot. All of these crypto companies and projects are built on blockchain. Blockchain is essentially a digital ledger. So it's a means of recording transactions, sending value, sending messages, and you can actually just think of it almost as like an email. So an email allows you to send a message anywhere in the world at any time in a matter of seconds. And you can go back and see that chain of emails, and it basically creates a digital footprint of exactly when that message was sent. A blockchain basically does the same thing with information and with value. So the block in blockchain is just like an email in the sense that it can only store so much megabytes of information. So an email typically is 25 megabytes. If you have more than that, you have to either send an additional email or use like a Google Drive link or whatnot. Same exact thing with the blockchain. You can only store so much information in one block. The second that gets filled, another one gets added to it, and it creates a chain that you can go back at any time and see exactly the lineation of what happened. So for those people, just think of almost like an email. Decentralization. This one's a little bit easier to give at the time of examples, but generally what decentralization does is cut out the middleman, increase efficiencies, distribute ownership, and creates more security within these networks and within these companies that are being built. Another thing you'll hear is Web3.
This one's for me because I say it all the time.
Yeah. It's a great marketing term, but basically, let's rewind. You have to understand what's Web 2 and Web 1 first.
What is web?
Yeah. So Web 1, you can think of, 80s, 90s. You load up your computer. It's what they call read format. You can just see information on a screen, but you can't really interact with it much. Web 2 is basically, the early 2000s to what we have today, where it's read and write. You can interact with it, social media, e-commerce, but it's controlled by these centralized entities. So think of all the conglomerates, Amazon, Facebook, Google. They're these centralized entities that are basically controlling the internet that we see today. Web3 is read, write, and own. So you can actually own a lot of these new companies that are building on this new version of the internet. I'll leave it at that for the moment.
Okay.
Yeah. Another thing that you'll hear a lot is these wallets, these digital crypto wallets. Basically, it's just like a physical wallet that holds your cash, your identity, credit cards, except in digital form on your computer. It stores your crypto assets. You can send money. It verifies your identity when you connect to some of these blockchains. Also, what is a coin? What is a token? A lot of people don't understand what that means. And fair enough. I mean, it's not really the best word.
We have to go back to like physical, okay, I know what a coin is, so we'll call it a coin, even though it doesn't really.
It's not the best term for it, but whenever you hear token or coin, think stock or share of a company. A lot of these projects that we're going to be talking about look, act, and feel a lot like regular companies, and so do their tokens act a lot like stocks, bonds, commodities, not like currencies.
Got it.
Okay. They're not one-to-one examples, not apples to apples, but for the sake of this conversation, just keep that in your mind. All right. Smart contracts. This was the big innovation that came out of 2015 with the advent of Ethereum. Ethereum right now is the second largest by market cap behind Bitcoin. Basically, they introduced these smart contracts, and it's called a smart contract platform. The easiest way to explain a smart contract is through examples.
Okay.
So let's say, for example, we want to make a bet on a Red Sox-Yankee game. Okay, who are you going to take in that?
Taking the Red Sox.
Red Sox, all right. I'll take the Yankees on that. You are supremely confident that the Red Sox are going to win. Okay? So we're going to bet a meaningful amount, not $100. Let's say $10,000.
Okay.
Would you take that bet with me?
No, still no, definitely.
Well, why not?
The reward of potentially winning 10,000 is outweighed for me because there's too much I don't know, and I don't want to lose the 10,000. I don't know if that's a secure bet.
Now, would you trust me to pay you that $10,000?
No.
Well, why not? I've known you for a long time. I'm a trustworthy guy. Why
probably because you can't really secure it. It's like, well, can we get it in writing, or something like that? And it's still, even at that point, it's just.
Yeah, so that's the inherent issue that we have really in humanity, if you really think about it, is this issue of trust. We can't trust each other, even as much as you would like to think that you could trust your family or friend. Mm-hmm. You can't 100% guarantee that they will follow through with whatever it is that they promise you. So let's say that we take this bet, and I am some nefarious actor who has no intentions of paying you. I can make this bet, and hopefully if I win, you pay me out. If not, sue me. You're not going to be able
Yeah,
to get
we'll
the
go to
money
civil
from
court.
me.
Yeah,
and
okay,
you're not going to be
try
able to get the money from me.
Yep.
And that's the issue with most businesses is you have these legal contracts, which you pay lawyers tons of money to create. If someone does want to break the contract, it's going to take a ton of money to enforce that, go to court, could take years of litigation just to try to get the money back. It's a pain. But everything is written in these traditional contracts because that's the only way to legally enforce them now.
Yeah, and I even heard, I've talked to a lawyer in the past, if you write a contract in Massachusetts and have a different font than you do if you're operating in Delaware, then, well, maybe it's not valid. And it's like, what? How is that? So I totally get that.
Yeah, so it's just something with today's technology at this point is just super antiquated. It doesn't really make sense. So a smart contract at its core is an automatically enforceable contract that's written on the computer and lives on the computer, written on the blockchain. So let's say that we were to make this bet, and I wanted to actually pay you out. Okay. If you win, I now try to Venmo you. Venmo is capped at $3,000 per week. I use Venmo a lot for business. I'm already capped out. I can't send it to you. I say, all right, I'll get it to you in a week. And you're like, no, I kind of need the money now. I say, all right, let me run off to the bank. I go get $10,000 in the bank. I'm on my way to drop the money off to you. I get hit by a bus. My car burns. There's no way of you collecting the money.
Yeah.
You could go to my grieving parents and say, hey, by the way, Nick owed me $10,000.
Yeah.
But you're probably not going to collect on it. So again, even if I want to pay you, you may not get it. Now that's an extreme example, but
yeah. So tons of people I've worked with want to pay you, but something came up and now I can't. Sorry.
Right.
It's like, oh.
Right. So that's where if we were to make this bet through a smart contract, it would automatically pay you out the second that game ends. And there's no way that I can renege on that. Okay. So the problem is that if right now we were actually trying to make this bet, there's no easy way for us to do that at the very moment because I don't know how to code a smart contract. Neither do you. We're not coders.
Yeah.
So what these smart contract platforms like Ethereum enable is anyone to build one of these decentralized gambling applications on top of Ethereum using their technology that they already created. So they can build any application for any business that enables the use of these smart contracts, which again is cutting out the waste efficiency or creating efficiencies. So going back to that example, if we were to actually try to make that bet, we could basically use, I don't know, DraftKings, and we could bet peer to peer, and they actually charge 20% fee on that. It's ridiculous. But it's safe. You can onboard your money through them. It'll take a few days through ACH to get your money back out. Also take a few days. They charge their fee, but they're trusted, and
that's the best option.
Yeah, that's the best option that you have now.
And would this be a way to protect against, because what a lot of people do I've heard of people gambling with a bookie or whatever, and they bet $10,000 and they don't have $10,000. It's a sure thing, I'm going to win. So would this prevent people from making bets and making contracts that they can't uphold?
Absolutely, yeah. So you could not start that bet without submitting your $10,000. They submit that $10,000. It basically sets in what's called an escrow contract, just like an escrow company.
Got it.
And you basically pay almost no fee for that. And then it'll use what's called like a third-party Oracle system, which is just something that's connected to the computer, and it'll feed live data to that smart contract. And the smart contract is basically an if-then function. Yep. If this happens, then pay out that person.
And then, so say I have $10,000 in my bank account or my crypto wallet. Mm-hmm. I say, okay, I want to make a $10,000 bet with you.
Yep.
I only had 10, so now I can't make any other bets on the side, right? Because those funds have been already secured.
And the second it's over, you get distributed that money, and that's yours. It's cleared in your account. You could then go send it to someone else, invest it immediately.
Got it.
So now let's talk about Ethereum and get into it a little bit deeper.
Please.
Ethereum, again, is called the smart contract platform. They call it like a layer one, like base layer technology. You can almost think about it like if you were to play with Legos, you might start with a base, of Legos, a flat one, and then you would take Lego pieces and kind of build on top of it.
Yep.
You can think of that base as the technology that they initially provide. So they're called software developer kits. They allow any software developer to customize those smart contracts for whatever application they're trying to serve.
Okay.
except it's like 4 or 5 different major businesses all kind of combined into one that a developer can actually use for free instead of paying for. So for example, it's in the traditional space, if you were to try to build some type of software company, some type of digital app or e-commerce site, you might use Amazon Web Services for the data storage, compute services, whatever it may be. Almost every business these days are built on Amazon. You might use Shopify, which you can easily customize like your front end of an e-commerce store, and they deal with everything on the back end.
That's exactly the one I was thinking about.
Yeah. And that's integrated with Visa, and Visa is a settlement layer, so it allows anyone to take credit cards, and you pay a fee for that.
Yeah. And all the way you keep going up, and everyone keeps taking 1%, 2%,
here.
3%.
Yep. Amazon iOS App Store allows you to launch an app that anyone in the world can download. So Ethereum basically combines all of that into one, except it's free for the developer to create one of those applications, and then everything runs on Ethereum. Therefore, there on out. Does that make sense? Generally?
Yeah, I absolutely think it does. Ethereum essentially is the infrastructure, the foundational level, so that all of these other things can be built. And when you liken it to Web 2.0 or what we're usually using now, if you're a business, just like you use Amazon Web Services in Visa and your POS system, and everything else is layered on top. Is that about right?
Yep, absolutely.
Okay, cool.
Next thing I want to go over is called zero knowledge proofs.
Oh, that's a common one.
For the people that understand this, you might be like, why is he going into this right now?
No one saying that. No one understands.
This is actually like cutting edge cryptography right now, which isn't even really live in many instances, but it will be what everyone kind of builds on in the future, and will be integrated basically in every business.
Say it one more time. What's it called?
Zero knowledge proofs.
Okay, cool.
So an easy example of this is, let's just say that you're a pretty girl, you're going to a bar, and there's a creepy bouncer.
Yep.
You may want to verifiably prove that you are in fact 21 years or older, but you don't want to let him know your exact name, your birthday,
yep,
where you live, what color eyes you have, are you an organ donor? It's all unnecessary information that you're just that you generally are used to just giving to anyone. Mm-hmm. The only thing that you need to verify is how old they are. So what a zero knowledge proof does is...
you just need to verify, like, are they 21?
Exactly.
Yes or no?
Yeah,
that's it.
Exactly. So that's what this technology does, is through code, it verifies the individual that, yes, I am in fact 21, and that's all you need to know on your end.
You ask a specific question, I give you a specific answer.
And that's all. Yes. Got it. Yeah. That's a simple example. Mm-hmm. More real world example, let's just say that you are trying to find an apartment in New York City. Okay. They go really quickly. You contact a realtor. She gets you in right away. You love it. She says, all right, give me your application. I need proof of that you make 40 times the monthly rent. So give me over your bank statements. I need to see the reserves that you have. I need to know your social security number, all this other
criminal report.
Yeah. Criminal report, miscellaneous information. A lot of it being unnecessary. And you don't know that when you give her that information, one, you're probably not securing it yourself. You're probably sending it through Gmail, which is not necessarily very secure. And she's probably storing it in her Gmail and has thousands of other people's private information in her Gmail that also could be secured with a 123 password. Yeah. So it's just super insecure or unsecure, and it's just unnecessary. Mm-hmm. Now with the zero knowledge proof technologies, you could prove that, yes, I do have, in fact, the amount of money necessary. I make the right amount of money per month, and I am not a criminal. And you can submit that to the smart contract, and it'll verify that to the other end without giving any of the other information. And again, this can be implemented in a million different ways.
That's awesome. Yeah, suitable candidate or not suitable.
Right.
That's
all you need to know.
Yeah. Yep. Okay. I see that application going everywhere, from like just even like rewards programs. Like you hear about Staples getting hacked or whatever the company is that gets hacked. It's like, am I part of the rewards program or am I not?
Yeah, and even in hiring, discrimination. Like,
that's the biggest thing with when you submit an application for a rental property too. Someone you give them that information, and then they creep on your Facebook, and then it's like, well, there can be discrimination there because they don't like the way you look or whatever it might be.
Yeah, exactly. So that's why I wanted to point that out, is I think that the technology is super complicated on the back end, but it's generally pretty easy to understand the implementation of it. So within crypto, there's many different sectors, just like in the traditional market, you know, pharmaceuticals, finance, whatever it may be.
Yep.
The big one that really started to launch crypto to where it is today is called decentralized finance, DeFi for short. I want to give you an example of what's called a decentralized bank. Let's think about the traditional banking experience currently.
Yeah.
You go to Citizens Bank, you open up an account, you sit there for a half hour, fill out a bunch of paperwork, takes them a day or two to create an online account. You give them your $10,000, which you have to send over, write a check, takes a couple of days to clear. They pay you 0.01% on your money. They then lend that out on the back end. They, you know, lend it for mortgages, personal loans, whoever it may be, make 6, 8, 10% on it. They also charge, you know, monthly maintenance fees, overdraft fees, wire fees, and that spread they keep. That spread covers their overhead, you know, their electricity, their outdated technology, their employees.
A lot of stuff that you shouldn't be paying for.
Exactly. It's all unnecessary,
Yep.
and it can be taken out using current technology that we have today. Also, as far as the customer experience goes, I mean, just think about like how inefficient the current financial landscape is today. Like you write a check to someone or they write a check to you, you know, it takes a couple of days to clear. Actually, for one of my bank accounts, anytime I have a large check from a new person, sometimes it takes 14 days to clear.
Yeah.
It's crazy. They'll give me $200 the first day and then it takes 14 days.
And you just accept that as normal. Same thing if you get paid direct deposit or something like that, it can take several days.
Yeah, same thing with ACH transfers, wire transfers. God, I mean,
there's so much fat.
If someone hasn't done a transfer, especially international transfer or a wire transfer, go do one just
to see what
just
it's
for the fun of it.
Yeah.
Because it's really not fun. For example, one of my investors actually wanted to wire me money. It was a Wednesday. We didn't realize that it was a holiday, so we got to the bank. Oh, it's closed. Thursday comes around. He's busy, tries to send it out, didn't get it out till the end of the day on Thursday. The people on the back end didn't process it until midday on Friday, so it didn't actually get to the other bank to my bank until Monday, because they don't work on Saturday and Sunday.
Yeah.
And you can't go after 5 o'clock. You can only go during business hours, 9 to 5. So his money, he could not transfer to me, and I live in the same state as him. I live 10 minutes away from him. It took 5 days to clear. It's ridiculous. Like
when markets move,
it's super inefficient.
Correct.
It should move as fast as an email, and he had to pay $35 to send it. I had to pay $20 to receive it. It's just you waste an hour of your time
because they say so.
Yeah,
that's the answer.
And they pay you 0.01% for that service.
Yeah, yeah, I know. Yeah, that's crazy.
So this is an example of a decentralized bank. It's basically a simple website. Anyone in the world can log in at any single time. You can basically become a member by connecting your digital wallet, and in 2 clicks, you're in. It's no actual sign up or anything. You're just into it. Anyone can deposit money, borrow money. You can take loans out in a matter of 2 seconds.
Yeah.
It's that simple. Right now, that is paying. There's one called Anchor Protocol that I use, which is built on the Terra blockchain. It's paying out 19.5% interest.
You showed me this one, right?
Yeah, I showed it to you.
Yeah.
I would love to be able to show an actual example of it, but it's pretty wild to
say
see.
it one more time so they can look it up at home, or we can put it up on the screen.
Yeah, it's called Anchor Protocol.
Anchor Protocol.
When you connect, you can press one button, earn, deposit however much money you want. Takes 2 cents as a transaction charge, and you instantly start earning that 19.5%. You can take it you can take it out at any time, in at any time. It's completely fluid. You can send the money. You do whatever you want.
How much is my Santander money market savings account getting me in comparison?
I mean, money market maybe making 0.2%. I don't know. Yeah, exactly.
Compared to 0.19.5. Yeah.
Yeah, exactly. So they're doing that just by cutting out all the waste and inefficiency. So you can borrow money from them at any time. You leave collateral. A lot of that collateral that you leave there is actually earning interest for them. And then whenever you pay back the money, you're paying interest. So all of that money goes back to the users. The only money that they really keep is a very, very small, fraction of it, say, 0.5%. And that money goes into a treasury that the token holders, so the shareholders, own, and they can then vote on what to do with that. So whether they want to pay, developers to build out other features or pay themselves back in a dividend, they actually become owners of this decentralized bank. And actually, in fact, just as a user, you earn a little bit of their token.
So you're paying yourself. It goes to you, which is nice.
Exactly.
It would be nice if I have 20 pairs of Nike sneakers. I don't get shit for that unless I buy Nike stock.
Exactly.
And then even then you still have to pay for the marketing and the overhead and everything like that. This is truly like you become part of it and you are an owner in that.
Yeah. So this is a prime example of a crypto company, or they call it crypto projects because they're not exactly companies, built using the Web3 rails. So it's using a Web3 native wallet. You connect, money's in and out. It's all done on a blockchain, super efficient, and it's basically better than a traditional bank in every single way. Super easy. You make far more money. You actually earn part of the bank essentially by using it.
The worst part is when you have to actually go back to a regular bank and try to get that money, because then you have to deal with their bullshit again.
Yeah,
right? That's the worst part of that process.
Every single year, that on-ramp and off-ramp process is becoming easier and easier.
Yep.
In the Terra blockchain, for example, they have these called fiat on-ramps where you connect your bank account, it automatically converts your money into their native, what's called a stable coin, which for those who don't know, a stable coin is basically like a one-to-one backed with a regular fiat dollar. So it's basically a digital version of the dollar, which, to be honest, at this point, most dollars in today's world are digital. You don't really use physical dollars anymore. I think over 99% of the dollars out there are just in a physical form or digital form anyway.
Yeah, because banks can't hold all that.
Yeah, exactly.
Okay, so that, just a real quick on. So for that instance, you can go say Santander Bank directly to what you just said. What is it called again?
So they're called fiat on-ramps and
it.
off-ramps. There's a couple of them live right now. Like one of them's called Cash, K-A-S-H.
And so not to make it too confusing, but you don't have to go Santander to Coinbase to MetaMask to this. You can just go, that's very, for some people who are listening, that
one application from the iOS App Store, connect your bank account, automatically converts it. You pay a tiny fee for it. I think it's like $2 or like 0.25% for the transaction. And then they actually create a digital wallet for you. So you don't have to do that.
Oh, nice.
And from the bank, you can actually deposit right into Anchor protocol and earn that 20% directly and withdraw it at the same time. And it's non-custodial. So that means that you actually own the funds. They don't have control of them. And they're now issuing credit cards and debit cards where then you can pay
in that cash immediately and not have to take it out.
Because it automatically converts it back on the back end for the merchant. So
after the podcast, we're setting it up.
So they don't even know that they're getting paid in it doesn't crypto because they're not.
And that it makes sense because it shouldn't have to be this crazy back and forth. Like we have the technology for it. So that's really interesting.
Yeah. So every year this is getting more user friendly. It's just that it's very complex on the back end to try to program all this stuff.
And it goes back to your original point, but like you don't even have to caveat at that. It's like, think about when Web 1 and Web 2 first came into existence. It took until last year or 2 years ago for the majority of transactions to be happening online.
Yeah.
Now the majority of retail and e-commerce, business is happening online on your phone. That is that 20 plus years. And now you're saying you can just go and make this available now, which is kind of crazy in the short time cycle.
Yeah. And it's growing exponentially, but still what's holding it back is, again, the user interface, how easy it is to use, but also the trust. People don't trust it because they haven't used it enough. Just like originally people didn't trust using their credit card online because they didn't think it was secure. And now everyone does it without even thinking. So
totally.
And for example, like this Anchor protocol holds $19 billion in assets. Like it's not small thing. Like it's the real deal. So now we'll go into some more fun stuff.
Okay.
NFTs and gaming, which I know everyone likes to talk about. We'll start actually with NFTs. For those that don't know, non-fungible tokens, also not really the best acronym for it.
Buzzwords, man. They kill us because it's built on what was the past. So I think that's one big thing. It's like the buzzwords, don't get too caught up in them. It doesn't.
Yeah. So what does non-fungible mean? Well, fungibility means, let's say $1, for example. We could trade dollars. They're worth the exact same thing. Doesn't matter whose dollar you have. dogs are non-fungible. We can't just trade dogs. They have different values to different people. So that's what non-fungible means. So they're like individually unique. And then token, think of it as just shares of these assets that are on a blockchain. So non-fungible token. So basically one of one unique items that live on a blockchain. So you can think of like a piece of art. It's a one of one. Basically, this is just a technology really that lives on a blockchain that enables you to program in royalties, and it proves individuality of these assets. So we really started to see this explode in the digital art market. So I'm sure people have seen like these profile pictures or like these Bored Apes monkeys or these crypto punks that are worth, hundreds of thousands, millions of dollars. But a lot of them are, scams or not worth anything. 99% of all of these NFTs are going to be worth nothing and are worth nothing currently. But what it proves is, actually, let me rewind a little bit. Think about the traditional artists throughout history. Most of them died poor because they may have sold something one time, made a little bit of money, but then they were never able to capture any money on a secondary sale. So if they blew up after the fact and something was sold for millions of dollars, they didn't receive any money for that. So unless they actually got super famous at an early age, they never really made any money, or the family never really did. With these NFTs, you can actually program royalties into them. Yep. So now I create a really nice piece of art, I put it on a blockchain, someone buys it. On a secondary sale, I can get 10% of that sale automatically through these smart contracts. So an example of one of these famous artists, he goes by the name Xcopy. He just recently sold something on a secondary sale that he originally sold for only a few $100s a few years ago for $6 million. He got a $600,000 royalty check, essentially.
So someone else sold his thing that he didn't own anymore.
Yeah.
And he still got paid on
it. Automatically.
Which is kind of like...
He doesn't even have to know it happens. It's not like it's done through Sotheby's or anything. It just happens on a secondary market.
Yep.
And then he automatically gets paid for it.
And that's just coded in. So because a lot of people listening to this are not deep down this road.
Yeah.
So it's important so that they know, NFTs can be more than just collecting pictures and art. Because when I talk to my friends about it who don't know anything, and I'm in that boat as well, I thought it was just, it's a fucking JPEG, it's a picture, and then people collect it and trade it, and it's like, oh, that we just think it's like fancy because it's like a pair of shoes that are rare, know, and it's more than that. There's a total second and third layer.
I'll give a couple more examples as we go, but this technology can be implemented everywhere, just like all these other examples that I've given.
And one more thing. So this is like the way I look at it now is like there's a big thing out there with like Taylor Swift. She lost all of her like rights to her music, so she had to re-record everything. There were no royalties. Some guy in whatever Hollywood owns it now. So this would give her an option, or a future artist, to be able to make money on their music down the road as well. Contracted
Taylor Swift's actually a great example of it.
My girlfriend's going to love that one.
So I actually heard podcasts about this a few years ago where Taylor Swift specifically was having an issue with secondary market sales of her tickets. There was whales coming in, these companies that were buying them all up immediately using like bots and whatnot, and then selling them at crazy markups, 10x what they bought them for. And then her loyal fans could not afford to go to them to those to her concerts. So what she will be able to do through these NFTs, which is basically they can make it a virtual pass to get in, that they'll be able to keep on their phone and use a QR code to verifiably prove who they are, and that also cuts out the entire forgery market. People can't fake tickets, and that's another thing. Going back to the traditional artists, is 99% of the Van Goghs out there are forgeries. This can verifiably prove when it was created. Same thing with these online tickets. So they can actually plug in a royalty to them, say 70% royalty, where if you sell it, 70% of the funds go back to the original person. So it basically cuts out that entire market of trying to scalp these tickets. Yeah, exactly. And that's, what is that doing? That's cutting out the middleman, cutting out all this inefficiency, and giving the value back to the users. And that's exactly what they're trying to do. And actually, Mark Cuban is going to be doing this with his tickets for the Mavs games.
That's the example I was thinking, right?
Yeah.
The season ticket holders.
Yeah, exactly. So yeah, that's another example of it. But really, yeah, originally blew up with artists because they saw the value in it. They saw that, you know, especially as we move towards the digital world, these first digital artists are almost creating their own niche. So if you go back in history, you know, you have the modernism, post-impressionism, different ages of art. Now we're living through a digital art like phenomenon where 100 years from now, these first digital artists are going to be the Van Goghs of our time.
Totally. And that's not to be underestimated. Like people are like, okay, sure. But it's like, no, Beeple will be in the freaking history books.
Yeah, exactly. Yeah. Beeple sold, for those who don't know, a piece of art for $69 million. So yeah, it's real. And it's something to pay attention to.
And then one other question on that, not to go down too much of a rabbit hole, but because we talk about cutting out the grift, you know, the grifters who are just making money, just scamming away, whatever. That's what we hate about traditional stock markets and traditional businesses in general. What about when you say like, okay, the royalties are 70%? Will the market be able to say like, fuck off, dude, I'm going to pay that's a 70% markup in a lot of ways. So will the market determine that when Mark Cuban tries to say, no, we get a 80% markup on all these Maverick tickets? It's like, well, now you just stuck me with that.
Yeah, absolutely. But it's application specific. So he's saying, for example, for the premium games, he might do an 80% royalty to prevent people from buying them and selling them for crazy amounts of money.
Season ticket holders.
Where just your average game, it might only have a 10% royalty.
Got it. See, that's cool.
You can customize them. Yeah. So yeah, mostly in the art market, it's 5 or 10% royalty. And again, it cuts out all the forgeries. So what we're now seeing, and this is basically what I think is going to partially bring crypto into mass adoption phase, is in the gaming market. Yep. So this is a really interesting one. Think about traditional games currently. So say Fortnite, it's created by Epic Games, centralized company. It's what's called a freemium model. So free to play, but there's a lot of in-game items that you can pay for. So they make billions of dollars a year off of these in-game purchases, and people may not understand the magnitude of that, but it's a real thing. People are spending thousands of dollars to play and buy these in-game skins or golden swords or guns or whatever it may be. And what are those? Those are digital assets that they're paying real money for. However, it's the centralized company that is taking 100% of that profit, and they control the IP to those digital items.
And ownership, yeah.
They have the ownership. You don't, as the individual, actually own those items. I can't sell them to you. I can't transfer them to you. I can't sell them on the secondary market to someone in China that might want to pay 10 times what I paid for them.
Or if they ban me from the platform or whatever,
it's gone.
Gone.
Now think of the same game, Fortnite, built in the Web3 ethos of decentralization and user ownership. There's a game called Axie Infinity, which is basically that. This is a crazy number, but Axie Infinity has done, or last year.
Can you spell Axie for people if they want to look it up real quick?
AXIE Infinity. They did $100 million in revenue per month last year.
Oh my God. Did you have a comparable? What is that like? How much does Google make on ads in a month?
I don't know off the top of my head.
It's
a crazy amount of money. I think actually in August they did $364 million in revenue. So basically Axie is like a Pokemon style game where, again, anyone in the world can sign up for it. You have these 3 little Axies, you battle each other. And for playing the game, you earn their tokens, so shares of their company. And all this revenue that's being brought in, only a small portion of it goes to the developers that originally created. So 4 or 5% goes to the developers. And then 95% is shared with the owners. So you can go buy their token, you can earn it for free by playing. And then that money is distributed just like a royalty or dividend to the owners. So they're actually, it's called a play to earn model. They're playing for free or sometimes a small amount in order to play initially, and they're actually earning real world money by playing. So they're earning NFTs for free, or they can buy them, which then they can sell on a secondary market and make money. They're earning a stock essentially for free. As the game grows, that stock's going to grow in value.
Imagine if back in the RuneScape days, or even what what's it called? Call of Duty. As you like win more battles, you get these arbitrary points that you could buy a skin with. Now you can actually sell those points or use them in real life.
Yeah, and those points have attributable value to them.
Yeah.
Like they're actually earning dividends back and making real money. So now think of like the user that's paying money to play or can earn money to play. Which game are they going to play if all other things are equal?
Come on.
Yeah. Now, again, this is worldwide, and what you're seeing, especially in like third world developing countries, Venezuela, for example, kids are playing these games because they have internet access, but they don't have access to US dollars. They don't have bank accounts. They can't even transact in digital dollars, but they have an internet access. They can play this game for free and earn $30, $50 a day.
Yeah.
Denominated in US dollar terms.
Which is crazy.
They're getting rich playing these games. And that may not sound like a ton for, an American that has everything good, but that's a crazy amount of money there. So it's absolutely exploding in everywhere else in the world.
And to keep for one example, like I know in different countries like the Philippines, the average, like to live an average life, it's like if you make $500 a month USD over there, you're good.
Yeah, Philippines is one of the largest countries of where this is exploding. And
yeah, exactly. So this is a great way to, when you talk about distributing wealth, and you're not talking whether or not you want this, the socialization of money or whatever. This is a great way to get the lowest rungs of income across the world in a fair way to have access to money.
And that's where we're talking about the transfer of wealth.
Yep.
The people in Venezuela, their native currency, the bolivar, it's not an exaggeration. They have like 1,000,000% inflation.
That happens.
Their native currency is not worth the paper it's printed on. They are now getting access to US dollars and are changing their lives for the better in their families, and actually allows them to move out of the country and build lives for themselves.
So. Yeah, so it might be a 14-year-old making money in their basement, in America, but it could be changing a life for someone somewhere else.
Yeah,
and that's why
for their family.
You have to look globally at, okay, why would this why would this work out? That's one really good reason why this might work out, and this will become very, very popular.
Yeah. On top of that, gaming in general is continuing to explode in growth year over year. So you can just project out 10 years, and what does that look like?
Esports, yeah. Look at that right now.
Yeah.
Okay.
Last easy example is real estate. So right now, if you've ever closed on a property, real estate is super outdated. If you were to try to buy a property today, all right, you have a physical contract, all right, you might submit a deposit to a funds, whether it's a wire or through a check. You close on that property. They take the deed that you physically sign. They run it down to the town hall. They pay someone $100 to do the courier fee. You charge $85 to record it at the town hall. The title searcher will charge $300 to log into that localized database and try to look through the title, look through the chain of title.
See how much you owe in taxes or whatever.
Yeah, see if there's any liens, verify like the chain of title of ownership.
Yep.
And then you're paying an owner's policy, $3,000 to $5,000, depending on how expensive it is, and then a lender's policy on top of that. So you're paying thousands and thousands of dollars for that
earmuffs, realtors, closing attorneys, mortgage brokers. There's entire markets built upon the margins of these large transactions.
Yeah, and then you're paying an escrow company, and you're paying thousands of dollars every time you're closing on a transaction.
And then what they do is they take the title that you got, the deed to your house, and they put it in an envelope and they mail it to you in USPS, and you get, this is what I got. I got it in an envelope that was folded over and wet. Yep. Because it rained out, and they just stuck it in my mailbox. And it's like, here's the deed to your house.
Yeah. So what does this look like in 5-10 years? Everything's done through a smart contract. As soon as you close, the funds are distributed immediately to the seller. The deed is recorded as an NFT on a blockchain. You pay a small fee for that, and then you can cut out the entire title insurance industry because you no longer have to pay someone thousands of dollars for that insurance policy or to search for that title, because you can verify 100% who the chain of title is. I sold it to this person, they sold it to that person, and you can search all the liens, everything. Yep. You can do that instantly.
Got it.
I mean, that's a prime example of just cutting out fat in an industry. I actually have an investor who is a closing attorney. And when I first sat down with him,
oh my God,
he thought he understood crypto, and that's fine. And he was like, oh, what's good is that my industry, like, it'll never go away. And I kind of laughed, and I shouldn't have, but I gave him that example, and he was just like, oh shit, like, wow, I need to understand this better. So
that makes sense. And then the one thing I would say is what you'll have, and you know, for someone like me, I'm like, well, but then can't someone just like steal your NFT and then they own your house?
Yeah, I mean, security is definitely a big thing right now. So yeah, it is possible to have your NFT stolen. Or
I would ask,
crypto.
is it how safe is it right now though? In general, without an NFT,
if you do it right, securing your assets is the safest form.
Correct.
That's part of what getting back to the very beginning when I talked about cryptography. This is the safest form of interacting digitally. Like if you are actually securing and self-custodying your assets the right way, it is impossible for someone to steal those funds unless they do what's called like a wrench attack, where someone physically like at gunpoint and says like, send me your assets or whatever it may be. And even then there's ways to prevent that.
I'm sure that
with what's called like multi-sigs, where someone else has to have part of the signature in order to sign the transaction's consent. So,
okay.
Yeah.
That makes sense. All right. So we got that covered. That makes a lot of sense as far as like another way that we can trim fat, do something more efficiently, more securely.
Yep. Yeah. So, I mean, those are the major examples that I usually give when I'm exploring or trying to explain this to people. So again, just trying to get you from not understanding whatsoever to hopefully at this point in the conversation, you're like, oh, okay, yeah, I generally understand it. Like that makes sense.
Yeah. So what I want to do is build off this conversation in the future, because I think we're at a really good point right now.
Yep.
And we have a good foundation level laid, and then maybe we can get you back on and I can ask you a million questions for like a part 2 next time.
That's great. Yeah.
And I can get some feedback from people on this episode and say, okay, here are some questions that came up, you know? And so can you tell us a little bit more about your hedge fund, how people can get involved, that sort of thing? If they're interested in learning more, how can they reach out? Tell us about what you got going on.
Sure. Yeah. So it's called Digital Asset Investment Group. Technically, we actually can't advertise. We can only take accredited investors. Mm-hmm. So yeah, for those that aren't, you know, we can talk and I can teach you about crypto, but I'm not going to be trying to solicit anyone like that.
That's the way it probably should be, I guess.
Yeah. Yeah. I mean, we're fully registered with the SEC. You know, everything's compliant. But
how can they learn more? How can they?
Oh yeah, so Twitter is probably the best place.
Okay. That's so funny.
Yeah, what's funny is
I love it, man.
What's funny is before I never really used Twitter. I always had it, but just more for, you know, kind of looking up information. But now, I mean, it's where you live. Like most information firsthand comes from Twitter or Discord or it's Telegram. There's a bunch of different sites that people go to. But yeah, crypto Twitter is a big thing. It's popping off.
All right, cool. And how can they get in touch? Are we allowed to say this is how you get in touch with Nick Hayes?
Yeah,
if
so
you are interested in learning more.
Yeah, just search me on Twitter, Nick Hayes at Nick Hayes 11. Yeah, I mean that's probably the best place to contact me. So
awesome.
Always happy to talk about crypto with anyone.
Yeah, which you did for me. And no obligation. You know, it was good. It was awesome.
It's fun for me, and honestly, like it makes me better too. You know, you don't know something until you can teach it. So even these conversations, like every time I give it, it's a little bit more fluid, and you know, you start to understand it even better yourself. So,
well, I think that's my favorite part about this whole thing, and I didn't even touch on it really, but the fact that at the end of the day, you're a kid who found an absolute passion of his, and you can tell by the way you talk about it, you have a passion for it. When we sat down, there was like, it was nothing. You're just like, no, I want to teach you, I want to explain, I want to help. And the fact that you found this thing, a true passion of yours, and you can make a living off it and help others, I think that's like that's the best. That's awesome. And I'm very, very happy for you. I'm proud of like what you've done since, Rebels baseball. And it's just really good to see. So anything else, any other closing words or anything you want to say?
No, I think that's it. Again, for anyone that's interested, feel free to reach out. Happy to talk. And I always tell people, listen, it's worth your hour of your time to either listen to me or someone else that can explain the space and just start to do a little bit of research, because you don't want to be the person 10 years from now that missed out on Apple, Amazon, Facebook because you didn't want to put the time in to research it,
And that's exactly it right there. Don't be scared. to like learn, and it's okay because everyone's fucking confused on this stuff.
Yeah.
I was the same way. I was scared to learn and take that first step, and that's one of the reasons why I reached out to you, because I wanted to educate myself more. So if you don't know anything out there, it's okay. That's where we all start.
Absolutely.
And it's good to learn. So thanks, man. I appreciate it.
No problem. Thanks for having me.
Talk to you soon. Sweet.
Yeah, that's good.
Dude, that was great.
Yeah.